Okay, well, we have Abneesh Roy of Nuvama Institutional Equities joining in on the phone line for his quick reaction on the Asian Paint numbers. Abneesh, hi, welcome to the show. Well, it seems as though there is a disappointment which has come in on the top line as well as the volumes.
Yeah, definitely. This is much closer to our expectation versus consensus. So if I see our expectation was 4% volume and 6%, so very in line. In terms of the sales also, we were expecting around 8,600 crore and now around 8,450 crore. So very similar to our expectation. Yes, this quarter, as Mangalam highlighted, the festival demand has fully shifted. So in December quarter, we expect double-digit volume growth for Asian Paint and the entire industry in the deco. And first and third month of Q2 saw very high rains. So whenever high rains happen, clearly the outdoor paint is not possible. So these are one-offs in our view. The margin of 20.2% is exactly in line with our end street. So overall, this was expected, but we had cautioned that the volume growth and the sales will be muted, which I think consensus was a bit on the higher side. But this is more of a festival shifting which has happened and the impact of rains rather than demand deceleration. Mangalam's point on the 6% difference on volume versus sales, I think that's a point well taken. That shows the discounting and maybe some level of down trading, etc. Some of the construction, chemical, putty, etc. growing faster. But ultimately, the profit growth and EBITDA margin is quite decent. And next quarter, we should see double-digit volume growth and double-digit sales growth coming back for the company.
All right, Abneesh. So then the final question is that with the stock having underperformed its larger peers with the competition in sight, but still demand has been, like you said, deferred, not denied. What does one do with a stock like Asian Paints? It's pedigree, but going into a lot of competition, going into some margin headwinds when it comes to competition. How would you treat these numbers and the stock?
So two, three things. One is, of course, crude has also gone up a bit and FI selling is also there. And generally, the stock markets are in a bit on a correction mode. So in that context, I think Q3 should be a good trigger for Asian Paint. So that is something which will make a good buy at current level because a lot of the negative is factored in. In terms of Grasim entry, it will happen in February, March. So to that extent, Q3 results will come before that. So there is a short-term play which is available. And my sense is Grasim entry will impact Kansai, and some of the smaller players much more rather than Asian Paints. And long term, I think the industry is continuing to look at a high single-digit to a double-digit volume growth. So to that extent, yes, the overhang is there, but that's largely factored in terms of the current valuation, I would say.
All right, we have some more details coming in as well, and this is with regards to their non-paint business, a very small proportion of their overall revenues, but still something that the management keeps talking about.